If Donald Trump were to re-enter the political scene and push his economic strategies in 2025, his approach would likely be a continuation of the policies that defined his first term, with certain updates to address the economic realities and challenges of the post-pandemic era. The central tenets of his economic strategy would likely focus on tax cuts, deregulation, protectionism, and infrastructure investment, with a keen eye on reshaping global trade dynamics to favor U.S. interests. Tax policy. Trump's economic agenda would almost certainly feature significant tax cuts, particularly for corporations and high-income earners. In his first term, Trump enacted the Tax Cuts and Jobs Act, TCJA, in 2017, which reduced the corporate tax rate from 35% to 21%. If he were to return in 2025, Trump would likely propose further tax reductions, especially targeted at businesses, with the goal of stimulating investment, driving economic growth, and creating jobs. The idea would be that lower taxes on companies would spur them to invest more in American workers, research and development, and capital goods. Trump's tax cuts would likely remain a central element of his agenda, as he believes that the resulting economic growth from lower taxes would eventually pay for itself by broadening the tax base. Moreover, Trump could seek to make permanent the provisions of the TCJA, which were set to expire in 2025. These provisions include the cuts for individual taxpayers, and Trump would likely argue that making them permanent is essential to maintaining consumer confidence and disposable income, which in turn fuels economic growth. However, such tax cuts could again face criticism for disproportionately benefiting the wealthy and corporations, potentially exacerbating income inequality. Deregulation. Trump has long argued that reducing government regulations is key to unlocking economic potential. In his first term, he rolled back numerous environmental, financial, and labor regulations, believing they were stifling innovation and economic growth. In 2025, Trump's administration would likely continue to pursue a robust deregulatory agenda, particularly in the areas of energy production, finance, and technology. This could include reducing environmental regulations on the oil and gas industries, easing restrictions on banking and financial services, and cutting back on labor regulations that he views as burdensome to businesses. In particular, he might push for deregulation of renewable energy and carbon emission standards, which would be a point of contention for climate advocates but would align with his America First energy policies aimed at bolstering domestic production and reducing reliance on foreign energy sources. Protectionist trade policies. A hallmark of Trump's economic policies has been his protectionist approach to trade, characterized by his America First mantra. In 2025, Trump would likely continue to advocate for tariffs on foreign goods, especially from countries like China, which he has repeatedly accused of unfair trade practices, including currency manipulation and intellectual property theft. He might seek to impose tariffs or non-tariff barriers on a wide range of imported goods to protect U.S. manufacturing jobs, especially in industries like steel, aluminum, and electronics. His administration could focus on securing bilateral trade deals that he sees as more favorable to the U.S., renegotiating existing agreements or pursuing new ones with countries like Mexico, Canada, the European Union, and Japan. Trump's approach could also include reasserting control over global supply chains, particularly in critical industries such as semiconductors, pharmaceuticals, and rare earth minerals. This could involve incentivizing companies to reshore manufacturing to the U.S., offering tax breaks or subsidies to companies that bring production back to American soil. However, these policies could lead to trade tensions and retaliatory tariffs, especially with major trading partners like China and the EU. Infrastructure investment. Infrastructure spending could play a central role in Trump's 2025 economic strategy, particularly in the context of post-pandemic recovery and rebuilding U.S. competitiveness. Trump has long championed the idea of investing in roads, bridges, airports, and broadband networks as a means to stimulate job creation and enhance economic productivity. He might propose a large-scale infrastructure bill with an emphasis on public-private partnerships, PPPs, which would allow for private sector investment in national infrastructure projects. Trump's vision for infrastructure would likely include a heavy focus on traditional projects like highways and bridges, but he might also look to expand in areas such as digital infrastructure, broadband expansion, and energy infrastructure, e.g., pipelines and power grids. However, such a proposal would likely face opposition from environmental groups and progressive lawmakers who advocate for greener, more sustainable investments in infrastructure, such as electric vehicle charging stations or renewable energy projects. Labor and employment policies. Trump's economic strategy would also likely focus on U.S. job creation, with an emphasis on revitalizing domestic manufacturing. One of the key components of his America First agenda was to ensure that American workers had access to good-paying jobs, particularly in the manufacturing sector, which had suffered from outsourcing and trade imbalances. In 2025, Trump would likely propose policies aimed at reviving American factories and encouraging U.S.-based production. This could involve tax incentives for companies that relocate or expand in the U.S., as well as targeted training programs for workers displaced by automation or globalization. Additionally, Trump could look to further limit immigration, arguing that restricting the flow of foreign workers would protect American jobs. This could involve stricter enforcement of visa policies and further curbing the number of guest workers allowed into the U.S., especially in low-wage industries. Fiscal policy and the national debt. While Trump's administration initially cut taxes and increased defense spending, leading to a rising national deficit, his 2025 policies might seek to address the long-term fiscal outlook more carefully. The ballooning deficit could become a major issue for his second term, especially if the economy were to face downturns or global shocks. While Trump has historically shown little concern for rising debt, his approach might change if there is significant pressure from the financial markets or a growing concern over inflation. In that case, he could propose measures to curb government spending, particularly in entitlement programs like Social Security or Medicare, though this would likely face strong resistance. Technology and innovation. In response to the growing role of technology in the global economy, Trump could seek to support innovation in sectors like artificial intelligence, biotechnology, and 5G. His policies might include tax incentives for tech companies to develop products and services in the U.S., as well as measures to counter what he perceives as Chinese dominance in critical technology sectors. Additionally, Trump's administration could continue to focus on cybersecurity and protecting intellectual property from foreign theft, particularly from adversaries like China. In summary, Trump's economic strategy in 2025 would likely combine familiar elements: tax cuts, deregulation, protectionist trade policies, with a focus on rebuilding American manufacturing and infrastructure. While his policies would be designed to encourage growth and job creation, critics would likely raise concerns about their impact on the deficit, inequality, and environmental sustainability. Additionally, the global context of 2025, potentially shaped by geopolitical shifts, technological advances, and climate challenges, would require Trump to adapt his strategies to remain competitive on the world stage.